Hey guys, Costco just reported earnings for fiscal Q2 and it was packed with mostly good news for investors and shareholders considering buying the stock. Today I want to go over and show you the good and not so good news from that report, go over the outlook for 2026, both from management's perspective and from Wall Street's, and then most importantly cover whether the stock is valued at an attractive enough price for you to consider bulking up on shares today. So let's dive right in. First, let's get into the good and not so good. Good news was growth. Comparable store sales for the Q2 period were up 6.4%, and that's even with the quarter before that. So Q1 was 6.4% exactly. That is suggesting continued market share gains against, major competitors and peers like Walmart and supermarket chains like Kroger. So that's just overall, Costco is still winning market share and doing a great job right now. Traffic was about the same story. Customer traffic was positive and steady. So it was up 3.1% in both the quarter that just ended and the one before that. So that's great news again, suggesting Costco is winning market share. And it's really easy to grow sales by just boosting prices in the short term, but Costco is not doing that. They're doing it by kind of the hard way by attracting more shoppers into their stores. So average spending did accelerate a little bit. That's good news as well. That was up 3.5% compared to a 3.2% in the prior quarter. So people are spending a little bit more on their average visit. And management said that this was not due to just overall higher prices like tariffs or something like that, which is what some other retailers are doing. It was mainly because there was more spending on expensive products like appliances, high end electronics, they mentioned, things like jewelry, and these gold bars that Costco has been selling when you can get a hold of them. So those all kind of helped average spending increase by 3.5% in the quarter. And then digital sales was another good green shoot here for the business. That was up 21.2% compared to a 20.5% increase in the prior quarter. So that's a little bit of acceleration too. Costco, just like every retailer, is really investing heavily in the e-commerce space, and they are proving that they can win in that market as well. Traffic was up on the website, management said, and on the Costco up app by more than 45%. Now, what about the not so good? The renewal rate. So, Costco, remember, is not really a retailer. You want to think of them as a subscription business, as a seller, a club, a warehouse club. And so the subscriptions are really the most important thing that they sell. Again, those are sold mainly because people are enjoying the merchandising, but the renewal rate is key to the business over the long term. And that declined very slightly, it stayed above 92% of sales in the US market, but that was down about a tenth of a percent compared to the prior quarter. That's still an all time high, suggesting there's plenty of value that shoppers are getting for their annual subscription fee. And also remember, basically no one is canceling their membership year to year, even though they can do it very easily and with no questions asked. But that's something to keep an eye on. Management said that it declined slightly because of the mix of memberships that are happening and that are being purchased online right now. So those people tend to churn a little bit quicker than shoppers that get their membership at the store. So we're going to keep an eye on that over the next couple quarters. But like I said, it was basically steady at an all-time high. Let's look at the Outlook updates now. Costco does plan to open about 28 warehouses, they said, in 2026, which is a little bit slower than their normal annual pace of around 30. That's nothing to be worried about, though. Management said there was some issue with some Spanish warehouse openings. So, consider that they are full speed ahead with increasing their traffic, increasing their square footage by that 30 warehouses per year. And Wall Street is projecting sales growth of about 8% in fiscal 2026, which is stellar for a customer staple business like this. Earnings growth is going to be faster at about 11%. And again, those figures are, not something you'd expect to see in like a tech company. You'd want to see much faster growth, but for a company that's a consumer staple like this with a huge sales base already, that's really good news, I think, for the business. So earnings on that basis are going to cross by about $20, crossing to $20 a share in 2026. And as for the outlook for the cash and the dividend, that's probably the most positive thing I see. Costco sitting on over $18 billion of cash right now, and they only expect to spend about $6.5 billion investing on things like launching new warehouses in 2026. So that means there's a lot of excess cash, and Costco does not like to spend a lot of money buying back its own stock. It prefers to do things like a special dividend. And management said that they are considering that, but they have no firm plans for that. But the last time we got cash up to $18 billion, we had a huge special dividend. So I would expect to see one of those big dividends heading into your account if you own the stock in the next year or so. So finally, the valuation, let's look at that. Costco is valued right now at about 50 times that $20 per share of earnings that we're looking at over the next year. And that's obviously a premium compared to a lot of every other retailer. Walmart, whose stock has also been on a tear lately, they are valued at 44 times earnings. And as for sales, you still have to pay up a premium to own Costco as well. We're talking 1.5 times revenue for Costco stock compared to 1.3 times for Walmart. So basically, based on both the PE and PS metrics, they're going to be high compared to peers, but Costco is not valued at the high all-time high premiums that we saw in 2025. So putting it all together, we do have a stellar business, I think, that's enjoying positive but really steady growth right now, and it's valued at a premium. So that tells me that Costco is not really a screaming buy at the moment, and you might just generate average returns over the next few years. However, if you have been watching this business for a while and you like defensive stocks with a lot of great cash flow, and you like the idea of a big special dividend hitting your portfolio in the next year or so, I would say consider taking a position in Costco. Remember, you can buy in thirds like I like to do. Don't do your entire full investment at one time. You can buy just a small purchase. That way you can take advantage of any drop in price that might happen over the next couple weeks. Take your time in any case. There's nothing making you purchase right now. Personally, me, I'm holding shares. I've had Costco stock for over 8 years, and I'm not planning on selling them anytime soon. I think I'll hold them for many more years to come because I'm just so impressed with the business, even though it's just rarely available at a discount. So, what company would you like me to break down next? Let me know in the comments below. And then don't forget to like and subscribe. And until the next video, guys, keep investing.